Thanks for tuning in. You're watching Notepad. I'm your host, Ibrahim Sani. We continue on our mini-series of looking back at 2019 and what has transpired over the years, or over the year, and looking forward to 2020 and look at what's in store for us, at least for the first few months of next year. Joining me this evening is Sian Fenner, the ICAEW Economic Advisor, as well as the lead Asia economist at Oxford Economics. Sian, thank you again for taking the time to speak with us. It's also interesting because earlier today you launched the Southeast Asia Economic Report. But before we jump into that, let's take a look into the macroeconomics of Southeast Asia. How has it been over the year, and particularly some highlights that you want to share with us?
Okay, well, 2019 has been very marked by a synchronised deceleration. We've seen this deceleration in growth in Southeast Asia, but we've also seen this synchronised deceleration in growth for advanced and other emerging market economies.
So everybody's decelerating?
Everyone has, and that's primarily been because of the global trade environment. 2019 has actually been a very dismal year for trade. We actually saw it contract, global trade contracted in Q3, and primarily it's some previous tightening by the US and China, but also, of course, the US and China trade war.
Every country in the world that is of note has China and US as one of the biggest trade partner. In Malaysia, they're second and third after Singapore. And of course, this has seen some changes into how we do things, at least in terms of trade. Do you think that because of the, I guess, synchronized uniformity of deceleration, this will continue on towards going into next year?
Well, I mean, I think there are actually some positives. I know I came out sort of fairly negative about 2019.
You're not the only one.
But as we do actually see some of the things that have been weighing, particularly on Southeast Asia exports and for Malaysia, they should actually turn a little bit more positive. And so that's in semiconductors, so we should see a bottoming in that electronic cycle. That will definitely be helpful. We also should actually, we're looking for at least this phase one deal between US and China to eventually be signed. Now, that doesn't mean the bulk of tariffs will be removed. The damage has been done, but we should actually start to see a modest improvement in exports as we go forward.
One industry that is consistently, not talked about that often is E&E sector, semiconductor business in Malaysia. And not many people are aware that that is the largest export for Malaysia. It's not palm oil, it's not anything else, not rubber, whatever. It's that. And because of the biggest clientele that this particular industry has, both in China and the US, some of the business owners that have sat in the same chair that you sat in, or you're sitting in, is complaining about the dismal opportunities that they have had for this year. What would be some of the key impetus that they can actually enjoy next year to see their exports grow, at least in the near term?
Okay, well, I mean, as we sort of go further into 2020, what they should actually be starting to see some positive signs about is some price improvements. So we've actually been seeing some quite significant price declines in the electronic sector. We are expecting that to come through. We're also expecting demand to start to improve as we go into 2020 as well. So that will make a more conducive environment for Malaysia's electronic exports.
Let's talk about the political environment as well. Malaysia is into the second year of a new administration, and Indonesia has reintroduced or re-elected Jokowi for his second term. Do you think that political stability is also an important factor moving forward?
Oh, it's absolutely important. I mean, it's necessary particularly for Indonesia and Malaysia, which compared to the other countries in the region, do actually have foreigners holding more government bonds. So that makes them more sensitive when you do have some risk, adverse sentiment. So, I mean, you do want some political stability to go through, that they actually do continue to want to hold, and you do see those capital inflows into those countries.
Let's talk about capital inflows, because it's interesting that you brought it up. In Malaysia, there's some rough estimates of anywhere between $6 to $10 billion of foreign money being pulled out throughout the year in staggered nature. What were the reasons, do you think? I guess we were waiting to speculative territory right now, but what would be the reasons why they pulled their money out? And do you think those reasons will hold, at least for early next year?
Yeah, there's probably two factors here. So if we're talking about capital flow inflows, we're thinking about FDI and we're thinking about portfolio flows. So, I mean, FDI inflows into Malaysia, there was some hesitation, if you like, while they were actually trying to determine under the new government, under the sort of review of infrastructure projects, what would that mean? Now, I think that actually has eased. I think there are signs that infrastructure projects are being approved, but the other factors is portfolio inflows. And here it's a little bit different because Malaysia is actually being part of one of the indices does mean that they're currently under review. And it does look like they're actually probably the weighting is going to be reduced. Now, by having that reduction in this sort of emerging index, it will mean that you're probably not going to see as much portfolio inflows as what you have in the past.
So would that mean that the government has to raise bonds moving forward?
Not necessarily. I mean, I think what they want to be doing, or what they probably should if for a longer term sort of, potential growth, is actually making a conducive environment for FDI inflows into the country. Particularly that we're in a situation that the US and China trade war has definitely sped up of firms readjusting supply chains within the region. And there are a number of reasons why Malaysia can be attractive, particularly in terms of ease of doing business relative to other countries. But to continue to provide that sort of conducive environment, they will need to continue with structural reforms to continue to encourage this.
It's very hard for them to do reforms if the MPs don't turn up for work, right, in Parliament. The other important note that we should talk about is Vietnam and how they have, I guess, excelled this year despite the slowdown in global economic conditions. What would be some, notes that you can make from Vietnam?
You're absolutely right. I mean, Vietnam has been one of the benefited from the US-China trade war. We've definitely seen a trade diversion from China to Vietnam. In fact, actually exports to the US are up more than 20% year on year. And that's offset some of the weakness we've seen in the other markets. Now, there's probably two things I'd say here is, first, it's definitely that they've been experiencing a increase in production capacity. We've seen FDI inflows, not just from this year, but from numerous years beforehand. And that has actually provided the capacity for them to meet this demand. But I would have a little bit of caution here, is that I would also argue that some of it is actually some rerouting of Chinese goods to Vietnam, put a made in Vietnam sticker on it. And that is a little bit of a concern because the US is taking note of this.
But it's still happening because of the proximity that they have between these countries, the sharing of border and such. But the big manufacturing companies, including telco companies from Apple, Microsoft, and you name it, right? All these guys, they are now slowly, not just rubber stamping it from made in Vietnam, but literally moving manufacturing sectors, not just into Vietnam, but perhaps into India as well. They're also shopping around for other markets. Malaysia is included in that, short list. What would be some of the key considerations for these kind of companies when they think about moving their manufacturing sectors out of China moving forward?
Yeah, I mean, it's definitely going to be dependent on what type of manufacturing it is. So if it's more labour intensive or if it's more on the medium to high skilled, that will be important. On a more labour intensive, they are going to be considering things such as the labour supply, how much labour supply there is, how relatively cheap the wages are. And then they'll be also then trying to think about sort of the quality and the ease of doing business. Now, under that scenario, Vietnam still sort of out of this region is the attractive destination. But if you start going to some of the other sectors where it requires more skills, it will take a little bit longer for Vietnam to actually get that skill set, and Malaysia could actually be one of the beneficiaries for that. Relative in education levels, a little bit below Singapore, of course, but it is actually still one of the sort of the bright areas in terms of education.
Because the cost structure is still favourable towards Malaysia?
The cost structure is less favourable. It's less favourable for labour cost. It's less favourable relative to Vietnam, Indonesia or Philippines.
Yeah.
But it does have the advantage, particularly Indonesia and Philippines, in terms of the quality of the education labour force, as well as that ease of doing business and the quality of the infrastructure. So firms, when they're making these decisions, they're considering labour, they're considering infrastructure, they're considering regulations, institutions, electricity capacity. They're all factors that they need to take into account. So Malaysia does actually move up the ranks when you actually consider those other non-labour costs.
All right. We'll take a short break before we continue on with the ICAEW economic report that was launched earlier today. Thanks for staying on with us. I'm with Sian Fenner of ICAEW. Earlier today, the ICAEW fourth quarter economic update of Southeast Asia report was launched. Sian, maybe you can walk through us about the highlights of the report.
Okay, so I think some of the key highlights is that we're actually looking at what the external sector is going to do in terms of exports, which have been a key drag on the majority of the economies this year. We're actually looking for a modest improvement, but we think there's going to be a reason why we can't see any kind of significant improvement, and that is that the bulk of the US-China trade tariffs will remain in place. There's a wide gulf between what the US wants and what China's willing to give. Therefore, the onus for growth remains very much on domestic demand. And the authorities generally across the region have been quite quick to try and support demand. And unlike the West, we've actually seen that in this region that it's not just been they've had to rely on monetary policy, but they've also been able to use fiscal policy as well. So fiscally, we've seen in particular Thailand and Philippines have increased their spending and planned with the stimulus package, but also plan to increase 2020. We see Singapore as having quite more space, fiscal space within the region to actually implement more government measures to support demand. In Malaysia, they did actually release a mildly expansionary budget, but we think there's sort of there's limits to how much more support the government sector can do. One is their eyes still on fiscal consolidation, and we also see there's probably going to be some fiscal slippages next year.
Yeah.
With the monetary policy setting, we expect them to remain very accommodative. Inflation's low, currencies should remain stable, and the Fed will continue with one more interest rate cut. So with this environment, though, we think that growth as a region should stabilise at about 4.5%. That's unchanged from this year, but it is down from that 5.1% growth that we saw in 2018. But next year, we are looking for some more variations in growth. So we're looking for those particularly who have been a little bit more aggressive in terms of macro policy stimulus, so Thailand, Philippines, to actually see an improvement in GDP growth, where those countries that have provided some support, but not as much, should actually start to see growth either stabilising, or in the case of Malaysia, we're actually looking for Malaysia's GDP growth to slow to 4%.
All right, so to get an average of 4.5%, there are some laggards as well as some outstanding countries moving forward, getting 6-7% of growth. I suspect those are Vietnam and Indonesia. But we look at, when you say domestic demand, there's also the ability for the domestic consumption to actually aggravate themselves. This would mean more disposable income to be made for the people. What is the reality of domestic demand being sustainable, at least for the first quarter of next year?
Okay, so again, that's going to vary between countries.
Yeah.
So for those countries, so we have a number where there's, like say Thailand, for example, their stimulus package does actually include some support for household spending and for farmers with drought. But in other countries, without sort of those cash handouts, it's very much going to depend on the labour market. And in generally, we're seeing that while they've sort of been fairly healthy, labour market conditions are softening. So generally we're looking for a more modest deceleration in household spending as we go into 2020.
What about currency? What's the story there?
Okay, so we're looking for, against a backdrop of a fairly sort of broadly stable US dollar, we're looking for most countries to experience just a mild appreciation against the US dollar. There could be, I think probably what's more interesting than maybe the baseline case is the prospects of sort of episodes where they could come under pressure. And very much we think that's going to be, again, related to what's happening to the US-China trade war. Yeah. We've seen that currencies have been quite sensitive to this year. Particularly say in May and August when tensions did escalate, and particularly those currencies which are sensitive to the CNY. So the CNY in particular does perform poorly. But that said, even during these sort of episodes, it's unlikely that we're going to see some significant sell-off. Foreign reserves are still very strong. We've seen that trade balances have generally improved across most of the region. So that means we're unlikely to see a big sell-off and a big capital outflows from the region.
The thing about the US-China trade war, it has come down to distilling it to two personalities between Xi Jinping and Donald Trump. And while Xi Jinping is domestically quite stable and firm, autocratically, if I may say so myself. Donald Trump, however, is on the other end of the spectrum, and his position of holding that particular office is also precarious right now. What is the reality of the global economy actually reacting towards the impeachment that is going to take place?
I think it's going to be probably quite difficult for an impeachment. You do actually need to get the Republicans to vote for that. And I mean, while various people may have things to say about Trump, I mean, he's still a Republican underlying. I mean, as we get into more 2020 and before the election, it's going to probably get a bit more interesting for us in the region. It's going to be interesting about how it's not just Trump, it's not just the Republicans, which do have sort of this view that China needs to be railed in terms of its trade. If you look at the Democratic Party, people who are also aiming for going for the election, they also do have quite a hard line on China. So there's bipartisan support, both on the Republican side and on the Democratic side, to actually maintain. So I don't think that conditions, well, the attitude towards China will ease anytime soon, even if we do get a change in.
So this is an extremely bleak picture that you're painting, because it doesn't look like this particular trade war will abate over time.
I think there's probably there's probably a difference between whether or not it's going to re-escalate. So we are actually looking, so we are looking for a phase 1 deal to eventually come about. It's going to probably be getting those sort of low-hanging fruits. So here we're looking at an increase in agriculture production, the tariffs that were originally in October to continue being suspended, and these December tariffs to be suspended. But fundamentally, the core reasons why we're at this situation: industrial policy, intellectual property, subsidies, for example, they haven't been addressed. And the gulf between what the US wants and what China's willing to do is quite large. So we think it's going to be increasingly difficult for them to actually get a phase 2 deal or phase 3 deal, which means the bulk of tariffs are going to remain.
And therefore, some of the countries, particularly those in South Asia, can actually capitalize on this opportunity.
Yeah, I mean, in the medium term, the fact that this has happened, and also, I mean, remember the underline that it's getting more expensive to produce some of these goods in China. Yeah. So this is probably, the trade war is probably a bit of a catalyst. But absolutely, I mean, we do see that the Southeast Asia region should be one of the regions that benefits the most from this, eventually.
Yeah. No, of course. Yeah. I mean, as a region, having a big number of 4.5% growth is indeed remarkable, because you can't, if you shop around other economic regions, you can't get this kind of number. No. And therefore, all eyes should be on this particular region. So one thing that I want to highlight right now is that not every country in Southeast Asia like to work with one another. There is still that kind of sibling rivalry that's taking place. Is this a real concern in terms of raising that growth regionally if we have an increased competition within countries in Southeast Asia?
I suppose the concern is more it's the loss of potential growth. That is being missed.
The economic loss.
Absolutely. I mean, the fact is we are seeing inter-regional trade continue to increase. It's becoming increasingly more important as we're also moving to the fact, 10, 20 years, the growing middle income class is actually going to get larger. So it's going to be an important consumer market. But it's being able to take advantage of countries with their comparative advantage when currently that is not being allowed. And it's also, while the tariffs, you're not seeing tariffs, there are non-tariff barriers still in place.
Oh, yeah.
Yeah. So, I mean, those are factors which are not enabling, is capping, if you like, putting a lid on the potential growth for the region. We could see quite a lot of improvement in productivity if we are able to see labour mobility, or even actually just the ability to make sure that traded goods and services as well, which is an important growth driver as we go further out, if that was able to be sort of free, be able to move more freely within the region.
Okay. We'll take a short break before we conclude our discussion with ICAEW. You're watching Notepad. I am with Sian Fenner of ICAEW. We're talking about the 2019 fourth quarter economic report on Southeast Asia, and perhaps a peek into what 2020 may lie for us. Of course, Sean, we've covered a few issues. I want to talk about the SME sector per se, because before we went into the break just now, you were talking about legal services, you're talking about supply chain, and of course, in every country, the sizable chunk of employers are from the small and medium-sized entrepreneurship sector or enterprises. In Malaysia, the number can go between 80 to 90, depending on how you measure the size of medium-cap companies. When we talk about SMEs, normally they are in the production side of things. Of course, there's a sizable amount of services as well. Do you think that SMEs, at least in Malaysia, can look forward to trying to capitalize on some of the opportunities that might lie ahead?
Absolutely. I think especially if you do have, when you do have it, particularly in the production or the manufacturing, when you do have sort of foreign direct investment in their foreign firms, that's also, there are transfers there, technological transfers and skill transfers. So they can actually take advantage of that. And if the government continues to encourage, both through, you can do things such as productivity schemes, to actually ensure that these SMEs can remain competitive in the environment, because it's not going to be within just Malaysia, it's actually being competitive with the other SMEs, all the big companies elsewhere. So the things that the government can actually do as well to encourage that.
One of the complaints that the SMEs have, if they come on my show, it's not about them having limited access to capital, it's about them having trouble with regulation within the country as well as within neighboring countries as well. And it seems like they might not have the lobby force to actually talk to governments and try to change regulations in a way where it favors SME to move around their goods and services and products. Do you think that this will be one of the biggest stumbling blocks, instead of, say, for instance, access to capital?
I think you're right, actually, for that. And there is actually a forum where that could be improved. So if we look at the AEC, they actually do have a number of things. So the
ASEAN Economic
Community.
Oh my God! Okay, that one, yes.
But if we look at that, they actually do have a number of plans to actually make things more digital, and especially for synchronising the regulation between countries. And if they were able to continue with that and synchronising and simplifying, and it's by simplifying this kind of regulation which would help these SMEs.
Okay.
Yeah.
Instead of having more, just streamline stuff.
Absolutely. I mean, if you can sit there and just quickly fill out a form to say, okay, these are the goods or this is the services that I'm coming, and me in Singapore, you in Malaysia, I actually can easily know exactly what that is, because there's a conformity between those two.
Yeah.
And so it just reduces the red tape, reduces the time that is in place there, and will make it easier for SMEs to be competitive.
See, I'm not particularly optimistic about forums like AEC getting things
At
done.
the moment, absolutely, I completely agree with you. We haven't seen it.
Yeah.
There is a forum there, there's a place where this could be undertaken, but it's disappointing that it hasn't to this degree.
50 years ago, there's a lot of Chamber of Commerce here in this country, and I'm pretty sure there's elsewhere as well. Chamber of Commerce can be, productive in getting things done, or efficient in getting things done, because it's, they live in the area, it's within the same town, it's the people that they know, and they can have coffee or whatever to make things happen. But when you cross border, it's extremely difficult, when you want something done in, say, Ho Chi Minh or Manila or Bangkok. Because of this absence of a productive or efficient kind of forum, do you think this will continue to just be, unsolved, at least in the near term?
I think that's sort of difficult. I mean, you're very...
You share my pessimism.
Yeah, I do to a degree. But then I'm an optimistic person myself. I think you're absolutely right about the importance of these chambers, because they also have an ear to the government as well. And so they can be quite a good medium going between the SMEs, and the government. So I think they're quite important. When it goes into, do you have this internationally? Again, it's relying on the governments and ASEAN. I mean, it's a good community. It's a community there that can actually really encourage sort of free trade of goods and services. But it just needs to continue. We've got too many stumbling blocks at the moment. And it might be, to some degree at the moment, that we are generally, it's not just the US and China, we are generally in a more trade protectionist environment. Tariffs, non-tariffs.
Yeah.
And so there's that reluctance at the moment. So, you know, that could very well just hold things back for the moment. It's whether or not, if that does move ahead, that will be very advantageous.
Let's, because this interview's drawing to a close, if there are 3 or 4, you know, risks that lie ahead, what would be some of those things that we might have to look out for?
Okay, so in 2020, there's probably sort of 3 sort of risks that we see. 2 of these are on the downside. So one is if we see actually this global trade war, if you like, actually, well, the US-China trade war actually escalate to a more global trade war.
Okay.
Now, we've only got sort of 5% on this, but we've already seen Trump coming out saying that he's going to tax French champagne and cheese. You know, the Eurozone in general has been under fire. We could see automobiles. In an environment where we see all Chinese imports being, with higher tariffs, a number of the other countries, this of course would really weigh on world trade, and it's going to impact those that are more exposed both to China and more heavily dependent. So that's Singapore, that's Malaysia, even Vietnam would come under fire under this. So in our report we have GDP at 4.5, but if we had it under the scenario of a world trade, you'd see it closer down to sort of 3.5.
Okay.
The other one is the prospect of a US recession. So generally we've seen some indicators for a US recession start to blink a little red. Again, that would be a downward pressure. But just to end on a more optimistic note is if we actually did come to a situation where we actually saw a turnaround, a more tangible results in the US and China trade war, we saw some of these tariffs rolled back. That would not only improve trade flows, but also sentiment. So that would be, quite beneficial for, business investment and consumer sentiment as well. So that would be an upside.
Consumer sentiment is extremely important. If I have to choose a favorite sector, it's always the consumer sector, because that always moves the needle in terms of any
Absolutely, particularly here in Malaysia. It's been, key engine.
That was my conversation with Sian Fenner, the economic advisor of ICAEW. If you've missed any part of this interview, just head on to astro.com, look for Notepad. Plenty of interviews like this can be found there. You can also watch these kind of interviews on your mobile devices. Just download the freshly launched or newly relaunched Astro app, wherever you get the application. Until next time, thanks very much for watching, and goodbye. Great.
Lovely, thank you very much.
Lovely, yeah.